Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news threats to trade arising, but not precipitously so yet. The US President has announced 25% tariffs on 800 Chinese products worth about $50 billion of trade between the two countries. Beijing responded in kind. Wall Street greeted the news gloomily, closing lower. Commodity prices tanked. Just the fear of trade is restraining the global economy. Meanwhile, American industrial production ended 3 straight months of growth with an unexpected decline. Output slipped 0.1% in May from April. Analysts expected a 0.2% rise. That leaves year-on-year growth at just 1.6%. Production of consumer goods and business equipment led the numbers lower. Going the other way, American consumer sentiment rose slightly in early June due to consumers' more favourable assessment of their current financial situation and more favourable views of current buying conditions for household durables. In Canada, sales of existing homes hit a 5-year low in May. The data was 7-year low for May data alone. However, sales in Toronto rebounded, and Vancouver, they were also higher. National prices were down 6.4% year-on-year, but are up a startling 11.5% in Vancouver, led by townhouses and apartment prices. In China, new data on electricity consumption shows it up more than 11% in May from the same month a year earlier. Factory consumption was up less than 8%, with service sector and residential consumption rising at twice that rate. China is not just adding generation capacity anything like these rates, so the consumption growth is unsustainable. In Argentina, their currency resumed its sharp downward fall, caused by the sudden resignation of its central bank governor. The rapid appointment of a market-friendly figure did nothing to stop investors facing the exits. In Turkey, their currency slid an eye-popping 6%. There is a liquidity crunch there, and 10-year bond yields rose towards their highest closing level on record, as traders braced for a deluge of debt sales this week. In Indonesia, their central bank governor said another rate hike is on the cards there at their June meeting to protect their currency. The US Treasury 10-year yield eased to 2.92%, down 2 basis points. The Chinese 10-year is at 3.65%, up 2 basis points, while the New Zealand equivalent is now at 2.94%, and that's unchanged. Gold has tanked, down $23 in New York to just $1,279 an ounce. And oil prices have fallen again by another $2.50 a barrel. The US price now at $65 a barrel, while the Brent benchmark is just over $73 a barrel. And the Kiwi dollar will start today at 69.5 US cents, while the cross rates were a little firmer at 93.2 Aussie cents and 59.8 euro cents. That keeps the TWI at 72.8 and still in its very tight June range. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.